the market, the street has just swallowed hundreds of thousands of OG coins that we know of, and that they've just and the price didn't really move. And what happens is when you get institutions that decide that they need an allocation to this thing, they start rebalancing their portfolios around it. And so if they wanted a 1 or 2 or 3% position in Bitcoin, if Bitcoin goes down, they buy some more. If it goes way up, they sell some because they want to keep it at that 3% position. And that does dampen volatility. And that's going to continue to happen more and more and more as Bitcoin is continued to be adopted by institutions. If we don't hit 130, I will be shocked. But I still think we can hit 150, 180 by the year end. It wouldn't surprise me in the least.
Lavish begins by addressing a feeling shared by many investors: fatigue. Over the summer months, Bitcoin has mostly traded sideways in grinding ranges. First between $100 and $110, then between $110 and $120, and now once again hovering around the $110 zone. Naturally, people are asking, has the market already peaked? Is the 4-year Bitcoin cycle broken? Or are we simply in another phase of consolidation? Lavish explains this as a familiar seasonal pattern.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
People have been frustrated just because I think they're a little bit fatigued. It's just been a long, grinding sideways summer, If you start out in the late spring, we were grinding from 100 to 110, and then we ground all the way through until July, and then we started grinding from 110 to 120, and now we're back around 110 now, a few days ago, and people are like, what are we doing? Is it? Have we hit the high? Is this cycle over? Like you said, is there no more cycles? Are there no more 4-year cycles? Like, what's happening? And at the same time, you had this a little bit of euphoria around the Bitcoin treasury companies, and we can talk about that, but got ahead of themselves a little bit, and they pulled back, and people were getting fatigued about that, and voicing their concerns about it. And I think that it's just the summer, this happened so many years in my career, Danny, where we're just sitting here in the summer. It's like, what is going on? And we're hedge funds. We're sitting at our desks every day, and there's nobody in Europe. There's nobody in Australia. Like, everybody's just off on holiday, and which is fine, and you should be. And we actually found that they have a robust backup system there because people are forced to go away for weeks at a time. And so, but if you want to trade in July, August, early September, good luck. There's nobody there. So, but it's the same thing here in a way, in that's when people take off because their kids are off in school and all that. And so you have young executives young investors who are taking off, and they're not active as much. And so the volumes are way down. So if you look at Bitcoin, volumes have been really, 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 really light. There's been nothing that has been shocking. And even though they're really light, the market, the street has just swallowed hundreds of thousands of OG coins that we know of, and that they've just and the price didn't really move, a couple percent maybe. If you tried to sell 80,000 coins 5 years ago, what do you think would have happened? So, and you had some people that were also at the same time, Danny, they're selling Bitcoin to turn around and buy treasury companies, and treasury companies get that capital, but they're not, using it yet, or they're getting capital from private funds like mine and, or hedge funds like mine. And they're not deploying it yet. They're not buying the Bitcoin yet. So capital's coming out of, and we physically send Bitcoin to them or whatever. And so that's like, there's either selling of straight Bitcoin or just a pause in buying of it. And then because of the MNAV situation, if you've got companies that are tapping the MNAV, that tap in the ATM with their market, NAV to Bitcoin over 1.5, and that you're not buying, you're taking dollars out to buy these companies that would have otherwise probably just bought Bitcoin. So that's 33% of the capital that's not being used by Bitcoin. So it's been a weird period. But all that said, am I bullish? Yeah. And I'm actually bullish short term too. I mean, now we're in a situation where all eyes are on the Fed. Like every single thing that happens on Wall Street is kind of centering around these economic indicators that are pointing to the Fed having to ease. And so it's priced into the market. 25 basis points is priced in. I still think we're going to see periods of volatility, extreme volatility when there's market drawdowns, in particular, and then extreme volatility to the upside when there is a reaction to it from central banks. So I still think there's going to be volatility, but just we're in this period of summer doldrums, just quiet. It's just grinding sideways, waiting for something to happen, waiting for something to move. It's been mostly following expansion of global liquidity this whole time. It just lags by 10 or 12 weeks. Bitcoin's been following it closely. Gold's gotten ahead of itself here according to those measures, but Bitcoin has been following it. And I think that we're going to continue to expand liquidity here going into the fall and up to at least the beginning of next year. So I'm not worried. The only thing that concerns me is some sort of black swan event that seems to come every 7 to 10 years. The 100-year event that comes every 7 to 10 years now. So I've thought that we could hit 150, 180 sometime this fall for a long time. I'm kind of surprised how hard we bounced off that 120, 125 level a few times here. And so, does that give me pause? No. Do I think that the 4-year cycle is over and bring it all the way back full circle to your question about Bitcoin in the beginning? I mean, I think it's changing. And one of the things that we didn't talk about is because of just the sheer amount of institutional capital that's coming into the space. And what happens is when you get institutions that decide that they need an allocation to this thing, they start rebalancing their portfolios around it. And so if they want a 1 or 2 or 3% position in Bitcoin, if Bitcoin goes down, they buy some more. If it goes way up, they sell some because they want to keep it at that 3% position. And that does dampen volatility. And that's going to continue to happen more and more and more as Bitcoin is continued to be adopted by institutions. And so, but I still think that Bitcoin, it can be extremely volatile to the upside too. And so people sometimes forget, all they see is those 50, 60, 70, 80% drawdowns. Like, oh my God, this thing is volatile to the downside. Remember, it rips higher too. And I don't know if it's true this year yet, but over the last number of years, or since the beginning, you had like almost 90% of your returns in Bitcoin could be captured in just 10 trading days a year. Mm-hmm. It really has violent moves higher. So that's an interesting thing to remember too. So I still think that we can get 130. If we don't hit 130, I will be shocked. But I still think we can hit 150, 180 by the year end. It wouldn't surprise me in the least.
The key driver here, once again, is liquidity. If liquidity expands steeply, Bitcoin is likely to rise steeply in response, lagging the moves by a few months. Conversely, if liquidity tightens, Bitcoin will feel the impact in similar fashion. This dynamic places Bitcoin in the same camp as equities and gold, which investors also use as hedges against inflation and stores of value during uncertain times. In fact, Lavish highlights that Bitcoin has become one of the closest correlated assets to global liquidity in recent years, a remarkable evolution for what was once considered a fringe asset.
If liquidity goes up steeply, Bitcoin goes up steeply, lagging it by almost 3 months. Comes down if liquidity is drawn out of the system, it feels it. So it does the same thing. And what's interesting about this is stocks do the same thing, equities, because people use those as places to tuck capital in order to protect it against inflation. They use stocks, they use gold, they use Bitcoin. So it's interesting. It's really it's become one of the best closest correlated assets to liquidity, global liquidity, over the last couple of years. So,
and what has global liquidity done recently? Is that now expanding again?
It is. It is. It's not rapid, but it's still expanding. And but you have these periods. So if you look at global liquidity, and Michael's thesis says that every 6 to 7 years, the global liquidity goes in these cycles, right? 6 or 7 year cycle. We're coming to the end of this expansion of this cycle, which means that. And it's supposed to, this cycle is supposed to end at the end of this year, beginning of next year. So if you think that global liquidity starts to tighten, if it's being drawn out, then at the beginning of next year, that would give Bitcoin to somewhere in the spring to summer to kind of top out, all things being equal, Does it follow it perfectly? No. Of course not. It's Bitcoin. It sometimes wants to march a different way, but it typically does correlate to it over those long stretches.
But are you pretty confident then that the liquidity cycle is going to sort of top out in that kind of time period? Because just on the sort of left end of the bell curve where I like to firmly sit, the thing that seems likely to me is that Trump's going to run things incredibly hot going into sort of midterms, which wouldn't be until this time next year. So could that liquidity cycle actually be elongated as well?
Well, there's only so much he can do, right? But he can pull back on tariffs. He can, he can sign into executive by using executive orders. He could sign something into practice with something that would be spending, but it's kind of hard to really change the big budget. I mean, the budget is the budget. He could go on some sort of hiring spree like Biden did through the executive branch, but by and large, of course, he could sign things into legislation like write off all the student loans. Well, that would be pretty inflationary. It's that's a lot of loans. It's a lot of capital. Or do things with housing. It's true, he could, but there's how much is that lag and all that. I do agree with you, and he will put pressure on the Fed to be accommodative rather than restrictive. And so that is one thing that he has been doing, and he'll continue to do. I believe that, and he'll get some other people around him to join in and pressure the Fed too. But look, he's going to have his third appointee here in pretty soon.
No outlook would be complete without addressing risks. Lavish acknowledges that unexpected black swan events, those so-called once-in-a-century shocks that now seem to occur every decade, could derail markets. These are always unpredictable by nature, but worth keeping in mind. On the political side, he also notes that U.S. leadership will play a role in shaping liquidity conditions. For instance, Donald Trump, should he push economic policies aggressively during election seasons, could extend the current liquidity cycle by easing tariffs, expanding spending, or using executive actions.